Hello everyone, and welcome to this presentation of how to trade the early trend. Welcome, my name is Stephen Primo. I am going to be showing you today two great methods that oftentimes will get you into a trade regardless of what market it is and regardless of what direction you're trading. But using these two methods will often get you into a trade before the trend has actually even started. This is before any news events come out. This is before some gap openings happen. I'm going to show you lots of examples where this has taken place. And as well, I will give you two of the rules to one of our most consistent strategies that will help you get into these trades. Welcome once again. My name is Stephen Primo. I am the president and founder of Specialist Trading. If you're new to our presentations and webinars, we are first and foremost an educational company. Just as you'll see today, I'm trying to educate you, and with each free presentation, I try to leave you with something that you can use on your own so that you can leave this presentation and start to implement it as soon as that day. Now, I've been trading for 38 years. I started trading on the floor of the Pacific Stock Exchange. I was on the floor for 16 years. 9 of them I was a specialist. If you're not familiar with what a specialist is or what a specialist did, because there aren't that many around anymore, if you ever look at the old pictures of the people yelling and making all these weird hand signals on the trading floor with all the paper on the ground, well, the gentlemen behind those large wooden booths were the specialists. It didn't mean that they were more special than anyone else. All it meant was that if you wanted to buy a certain equity or issue, you had to go to the trader who specialized in this. And the specialists were those few individuals that were in charge of making markets in anywhere from 35 to 50 stocks. So I did that for a total of 9 years. I did that through the crash. I traded through the crash of '87 and the bull market that followed. I've been in just about every market environment imaginable. I traded every strategy or every technique that you can think of. So I know what works in terms of consistency, and I know what doesn't. I left the floor in the mid-90s to manage money, to pursue my own trading. And about 7 years ago, I teamed up with Pro Trader Strategies, they're our marketing company, and I started Specialist Trading, where all I do is teach and mentor my students all the tips and techniques I've accumulated in my 38 years of trading to hopefully I can elevate your trading and shorten your learning curve. So that's what we do at Specialist Trading. We are first and foremost an educational company. We're not just simply going to spit out signals for you to blindly take. We feel that that really is a recipe for disaster, and that will in no way make you more successful than buying the most expensive pair of tennis shoes will make you into a world-class sprinter. It doesn't work that way. What works is hard studying and research, but based on fundamental information that has stood the test of time. And that's what I do. I pass on this information that I've accumulated. Now, today I'm going to give you some great information, once again, that you can start using as early as today. But before we begin, I ask that you please take a moment to view our disclaimer. We are required to show you this, so please take a few seconds to read it and view it. I'm going to show you a lot of performance results using these two methods, these two techniques, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. So as you're taking a few seconds to view that, I would also like to invite each and every one of you, if you haven't started to follow us yet, to follow us on Twitter. There's our handle right there, at SPCLST. TRADG. You may want to write that down. I post new and free information on a daily basis, anywhere from daily financial wisdom to actual signals that our strategies have generated. So there's a lot of great, limited, but great information there on a daily basis, so feel free to follow us on Twitter. All right, now before we begin, once again, our philosophy is an educational company. As you see here, my goal is not to simply force feed you signals the way so many other websites do and the way they make you pay for that. My goal is to teach you so that you can ultimately learn from me, feel confident and make your own trading decisions off the information that I give you that has stood the test of time, and then you can basically go out on your own. You're not going to be encumbered or having to pay a monthly fee every time just to get signals. You'll know where to spot them. You'll see them before they even happen because you'll have this information. You'll be mentored by me, and that's what we do. We teach. We don't trade for you, but we teach you how to trade with the specialist edge. This is the same edge that was able to turn my trading around and able to sustain me for the past nearly 40 years, and this is what I teach all of my students. Now, today is going to be conducted similar to a classroom. As I stated, we are an educational company, so since it's going to be similar to a classroom, I would ask that you please hold off on any questions till the very end of the presentation. That won't be very long, just in about 20 minutes from now, but I am going to give you a lot of information to absorb. So oftentimes if you just wait for the next slide, your question is answered. So if you happen to have a question, just kind of write it down. I won't even open up the question and answer box. That's the only way I can see your question. So I'm not even going to open that up during the presentation. So just hold off, and then we'll get to them in about 20 minutes or so. All right, so why don't we begin? Let's start out with method one, okay? This is a method that's really going to help you to become consistent and will oftentimes get you in and be able to trade the trend before it happens. This is strategy number 4. This is one of our most consistent strategies, and I'm going to give you 2 of the rules to this particular strategy. You're going to see how powerful it is, and you're going to be able to apply these rules right now either to your own trading, or you can see how powerful they are, or you can build a strategy based off of them. But these 2 simple rules will oftentimes get you into a trend before it even happens. First of all, let's talk about some of the highlights of this strategy. It's for all traders, from beginners to advanced. It's basically designed for traders looking to catch quick momentum moves. So when I first was introduced to this on the floor some 40 years ago, we were floor traders getting in and out in a matter of moments. But now in the course, we teach you how to stay in longer if you'd like. Its intensity level from 1 to 3 is very moderate, right in the middle. It's a 2, with 1 being the most intense, 3 being the most relaxed strategies. It only uses 1 indicator. All right, that's all we look for, and I'm going to show you what that indicator is in just a few moments. All right, this strategy virtually works in any time frame, so it doesn't matter if you trade tick charts or monthly charts. It absolutely makes no difference. Works in any direction, going long or short, and it works in any market. So I don't want you to feel like if you see an example and say, well, Steve, I don't trade that market, I trade something else. It virtually doesn't matter. We have people trading this on commodities. We have traders trading this not only on stocks, but on currency pairs as well as futures. All right. Now, if you become a member of the Strategy 4 course, you will receive automatic buy and sell indications. In other words, up and down arrows. You're going to see some examples of those in a few moments. But trust me, these are meant as educational tools. Remember, we're an educational company. So I don't want you to rely on those. And after a few weeks of studying, you'll be able to notice when signals have been generated without these automatic buy and sell indications. Now, our edge here is consistency. What does that mean? It means that all of our tips and techniques have a 2 steps forward, 1 step back approach. But we're not going to sit here and promise you that every trade works. In fact, I'm going to show you some trades today that didn't work. So I'm going to show you, just to be honest, fair and honest, I'm going to show you some examples that didn't work. But the beauty of our techniques is that they have very high resiliency. In other words, they're able to bounce back very nicely and swiftly. So often if you have 1 or 2 small losses, you'll be able to make that up in the next trade. So that's the beauty of what we teach and mentor in all of our students, consistency, okay? So why don't we begin? Let's start with rule number 1. Buy signals can only be entered above the 50-period simple moving average. Now, remember, even though this applies to strategy number 4, you can apply this to any strategy you're currently using, any technique. It doesn't matter if it's based off news or based off the full moon. It really doesn't matter. Just remember that if you're going long, your entry must be, even if it's just 1 tick, it must be above the 50-period simple moving average. Why? Because over time, you will have a higher level of consistency by using this simple rule. Let me show you some examples right off the bat. First of all, if we're going short, well, naturally, sell signals can only be entered below the 50. It's just the same rule turned upside down because we're going short now. Okay, now let me show you some examples. Here's an example in ATVI. Someone looking at this would say, well, there's no clear-cut trend here. We're just basically going sideways. But if you see the 50-period simple moving average there at the bottom of the screen, you ask yourselves, where is price in relation to that 50-period moving average? Price is above. So for all intents and purposes, the overall trend is up. Therefore, you can't be going short because price is above the 50. Now, someone would look at this and say, well, why not? I mean, I'm sure, what if this topped out and was rolling over? It could. I'm not saying it's not going to or it didn't, but the point is that we're looking for consistency in our trading. Consistency is what will sustain you throughout your trading career. Consistency is what will have you trading 20, 30, 40 years down the road, not using some systematic method that works great one year and then blows up the next. So if you want to be consistent, you should only be going long if your entry is above the 50-period moving average. As we see here, look what happened later on. Would you have wanted to short this stock if some guy in a chat room or trading room told you it was topping out? No. So I don't care who tells you or what indicator tells you to go short. If you are above the 50, you should only be looking to go long. Now conversely, if we are below the 50, as we are here in this example of KSS, we don't want to be going long at all. We only want to be looking to go short. Now, this doesn't mean that this is a strategy, that just because price is below the 50, you sell at the market, because there's no structure there. This is just an overall trend identifier, basic trend identifier, telling you, well, if the majority of price bars are below the 50, we're only looking to go short. And if we're going short, our entry must be below that. So once again, someone looking at this would say, well, Steve, we're making kind of a rounded bottom right here, and the chat room I belong to says that this is a really good bottoming sign. This is where all the institutions stepped in and bought. This is where the Fibonacci numbers all cluster, and so we should actually be looking to go long. I don't care what anyone tells you. If you're below the 50, do not even consider going long. Remember, we're looking for consistency. Would you want it to be long here when some news came out and then the stock gapped down lower? It's in your best interest to be in sync with the 50-period moving average over time. Okay, rule number 2 now. Now that you know the overall trend, just the overall trend for something, look for a bar now that closes either in the top 25% of its range or the bottom 25% of its range. This is depending on what side of the 50-period simple moving average you're on. Okay, this is extremely important. And I always have my students ask me, they go, what difference does this make? I mean, what is the point to looking to see where the bar closes? Well, as traders, especially beginning traders, we're always looking for clues from an outside source, either someone in a chat room, someone in a trading room, some guy on TV, someone in a newsletter, someone online, someone in a webinar, telling us what to do, telling us what to trade, when to trade. Where do we get in? Where do we get out? We're always looking for something to tell us, and basically we're taking ourselves out of the game by doing this because we're giving our power away to something and we just really have no say in the matter. Trading should never be like this. You should have all the say. You should be telling yourself where to get in and where to get out. And the only place you should be getting your clues from is the market. Now, if the market closes in the top 25% of its range and it's above the 50-period moving average, doesn't matter if there's a tick bar, doesn't matter if it's a candlestick, doesn't matter if you're looking at currency pairs, it works on all markets, all time frames. It's the market you're trading giving you a clue that most likely it's going to continue in that direction. And that's the only clue you should be taking your signals from, the market. Not some master trader, not some guy on a webinar, not some guru who's been trading for 50 years, but from the market. You should be learning from these outside sources, but when you make a decision, it should only be coming from the market. Now, conversely, if price is below the 50 and you see a bar close in its bottom quarter of its range, well, that's a tremendous clue, not coming from some trading wizard, but coming from the market, and it's screaming, most likely, I'm going to be headed lower. So this is what you should be listening to. These are the same clues and techniques my mentors taught me nearly 40 years ago. This is what I'm teaching you. So let's look at some examples on rule number 2. Now here's your standard bar. It doesn't matter. I purposely took out what this was, if it was a stock, if it was a currency pair, because remember, these techniques I'm sharing with you today work on any market. Stocks, currency pairs, futures, commodities. It doesn't matter. So it doesn't matter if we're looking at a candlestick or your standard open, high, low, close bar as we have here. As you see, when people always get confused, they say, well, Steve, what do you mean by closing in the top 25% of its range? Well, the range does not mean from where you open to where you close. I know a lot of people, for some reason, have gotten that misconception. Probably a faulty educator taught that the range means looking at a candle and looking where the open and where the close bar is, the body. That's not the range. The range is the top, the extreme high of the bar, and the extreme low. Now, if this was a candlestick bar, this would be the top of the wick, and this would be the bottom of the wick. So it doesn't matter what type of bar you're looking at. And then you simply divide by 4 separate but equal parts. Now, if we're above the 50-period moving average, we want to look for the top 25%. That's right here. So if we close in that top 25%, which we did in this example, that's an indication to buy. That's the market giving us a clue that most likely we're going higher. Okay, see how simple that is? It doesn't matter if this were a tick bar, it doesn't matter if it's a monthly bar, it doesn't matter if it's a currency or a candlestick. Don't overcomplicate your trading. It works on everything. It's the same thing. Now let's say price is below the 50 and we see a bar that looks like this, okay? We just divide it by 4 separate but equal parts. And if we close in the bottom 25%, the bottom quarter, which is right there, that's our bottom 25%. And this is an indication to sell. The market is screaming to us, most likely we're going to be headed lower, okay? So let's look at some strategy 4 examples that incorporate both of these rules. Now, strategy 4 only has 5 rules. I've just given you 2 of them, almost half. I've given you about 40% of the rules here, okay? Now, you can use these are the core of strategy number 4, by the way. There's only one more rule that is essential, that is a pattern recognition that I can't share with you because it wouldn't be fair for the people that have spent thousands of dollars for strategy number 4. But I've given you 2 of the rules entirely free. So what you can do is you can apply them to your current strategy, and I think that really increase your odds for success. Or you can build a strategy based off just what I share with you today. But let me share with you and just show you how powerful these 2 techniques are that I shared and how they can get you trading the early trend. All right. I'm also going to show you times when it didn't work. I'm going to show you that for a specific reason coming up a little bit later. All right, let's start out with stocks. Once again, this works on any market, any time frame, but let's start out with stocks for all you stock traders. All right, MSI. We were below the 50 period, but then we crossed above it, and the majority of price is now above the 50 period moving average. Now, once again, someone looking at this will say, Steve, there's no trend here. There's no trend at all. So I'm really not going to trade anything. I don't see any signal, or I don't see any reason to get involved in this. That's not true. If we are above the 50, as we are here for the last 3 weeks or a month, the overall trend is up. And what do we have here? We have a bar that closes in the top 25% of its range. Now, strategy number 4, proprietary software, generated a buy signal on this day. I realized there were other bars that closed in the top 25% of their range, such as here and here, but they didn't meet all of the other rules, the 3 remaining rules of the strategy, which I'm sorry I can't divulge right now. But the 2 ones which I did share with you today have been met. So a buy signal was generated, and look what happened within the next month, okay? Do you see how you're trading the early trend? Because we got in before the trend really took off. Why? Well, part of the reason was because of those 2 rules I just shared with you. We're above the 50 period moving average, and we have this bar here that closed in the top 25% of its range. So we entered this well before the stock went from roughly 59 all the way to 68. How about ADSK? All right. Let's look at the first 2 rules I share with you. Where is price in relation to the 50 period moving average? Price is below. So are we going to try and pick a bottom here? No. I don't care what anyone tells you or what every strategy you're looking at tells you. You're not going to go long because over time you'll probably lose money. Just like the slot machines, over time you really don't make any money. You may think you do every once in a while, you'll have a winner, but over time there's no consistency in playing the slot machines. It's the same way with buying below the 50 period moving average and selling above. Over time, you won't have anything to show for it. Trust me, because that's the way I used to trade when I first started trading. And for the first 2 years of my tenure on the floor of the stock exchange, I couldn't make a dime. It wasn't until my mentor showed me this simple rule that things started to fall in place. So that's rule number 1. We're below the 50, so we're only going short. And then we look here and we have a bar that closes in its bottom 25%. All right, now, once again, there are other bars that close in the bottom 25%, but this one made all of the rules and requirements of strategy number 4, so the software generated a sell signal. All right, and as you can see here, there's really no trend happening. We're just basically in a range, going down, going up, going sideways. So someone here would say, well, why are you selling? There's no trend at all. Well, this is the beauty of these techniques. They will get you in before a trend happens. Remember, the title of this presentation is How to Trade the Early Trend, okay? Let's look at Tesla, and I'm specifically showing you this for a reason here because I'm not going to sit here and tell you that every trade works perfectly. Where is price in relation to the 50 period moving average? Price is below. Are we going to be buying Tesla? No, we're not. We're only going to be looking to go short, all right? So if we're looking to go short, well, we want to look for a bar that closes in the bottom 25% of its range, which is right here, okay? So we're going to be going short. This is what we're trying to do. We're going to be going short Tesla. Two of the rules have been met. So we sold Tesla. An automatic sell signal was generated, and it didn't work out. So what happened? Well, remember, 2 steps forward, 1 step back. We're not going to tell you that every setup works, but please remember Tesla, because I'm going to show you later on in today's presentation how we could have totally bypassed this trade by simply applying another technique, which I'm going to be sharing with you, okay? Remember, if you have any questions, please wait till the end. I don't know if you may have come in late. We have some people that possibly came in later. We're not going to take any questions till the very end of the presentation. Okay, let's look at the E-mini S&P now. Now, here's once again is where someone could say, well, Steve, there is no trend. And this is a little bit more advanced kind of setup because we're oscillating above, below, above, below, above, below. So beginning students of mine usually stay out of markets like this because it's a little complicated. We're definitely going sideways, and it appears we're in no trend at all. But what do we have here? We have a bar that closes in the bottom 25% of its range, and it is below the 50-period simple moving average. So even though we have kind of this bouncing back and forth, it met all the rules of strategy number 4. So therefore, we are generated a valid sell signal. Now, once again, someone could look at this and say, Steve, why would you go short? There's absolutely no trend here. And the title of this webinar is How to Catch the Early Trends. There's no trend. Well, there wasn't when the signal was generated, but look what happened after that. We all remember what happened in August? Strategy number 4 got you in short before the trend started. Now, we're not saying you stayed in for this entire time, but obviously it would have been very difficult to lose money. It would have been typical for someone to try and lose money by buying and picking a bottom here. This is why once price is below the 50, you do not try to buy. If price is below, we're only sellers. You see how powerful this rule is now. This could have helped you so much in August. A lot of people lost money in August. A lot of people I talked to saying, I don't understand how you guys can make money when the market fell out of bed that way. Well, most of our students were short because they were using this simple rule. They were only looking for sell setups. They weren't at all looking for anything to go long. How about a 60-minute time frame? Okay, well, originally we are below the 50-period moving average, and then we kind of oscillate back and forth, and then we cross above. So in the beginning, we had a sell signal generated at the very top before the trend happened, and look what happened. The market fell out of bed. Now, when we got to this point here, we had another sell signal generated below the 50-period moving average, but obviously this one did not work out. We would have been stopped out with a loss. And then later on, a buy setup was generated. We closed in the top 25% of its range. Even though the bar opened and the majority of it was below the 50-period, it closed above the 50. So that still is a valid setup to go long, and it got you in prior to the trend going higher. So you had 2 winners here and 1 loser. Now let's look at the Forex markets for all you currency pair traders out here. Same concepts. We're not going to change anything just because we're changing markets or time frames. Here's a daily chart of the Canadian dollar. Safe to say that, would you try to short the Canadian dollar off of the rule I just taught you? No, because we're above the 50. So even though there could have been some tops here that you could have shorted, why would you want to take that chance? It's a lot easier to simply look for bars that close in the top 25% of their range, and then they met all the rules of strategy number 4. A lot easier, you're going to sleep a lot better at night knowing that the minute you get in, it's going in your direction. You don't have to hope and pray that things roll over for a short period of time and give you enough time to get out. A lot easier to be in sync with the trend than to try and fight it and to hope and pray that you hit some type of top or bottom. Remember, we do not trade tops and bottoms at Specialist Trading. We will trade bottoms in an upward trend. In other words, we will buy pullbacks, and we will trade tops in a downward trend. But to the to the unsophisticated investor, they think we're trading tops and bottoms. Those are usually for the people who haven't been trading for a while. But for the people who've been trading for a while, they know that, well, the overall trend is up, and we're buying on pullbacks. And the overall trend is down, we're selling on pullbacks to the upside. Now that's a daily chart of the Canadian dollar. Let's go to a weekly chart of the Australian dollar. As we come into this chart here, this is a weekly basis. This was last year in September or going into October of 2014. 2014, just exactly a year ago, we were above the 50-period moving average in the Australian dollar. All right, and we have a bar here that closes in its top 25% of its range. So the strategy software generated an automatic buy setup. Now, had you purchased that, well, the remaining 3 weeks, nothing really happened until the fourth week, the Australian dollar fell out of bed. So you had a loss. Most likely you're stopped out with this trade. Not a great loss, not a small loss, but still a loss, okay? But it doesn't end there, because the strategy found that there was a bar that closed in the bottom 25% of its range, and at the same time, even though the opening and half of the bar was above the 50, it closed below in the bottom 25% of its range. So it may be a little bit more advanced, a little bit more aggressive, but it still meets all the rules and is a valid sell signal. So the strategy software automatically generated a sell signal. Well, had you taken that, do you think you would have been trading prior to the trend? All right. This is where I say oftentimes, it's 2 steps forward, 1 step back. It'll have one minor loss and a minor loss, and then usually it's made back within the next trade or so. So even if you had taken that first buy signal, well, okay, you would have had a minor loss. But look at the next signal. I'm not saying you would have stayed in the entire time, but you would have had the freedom to do that if you wanted to. It's up to you. Remember, we want you to decide. We give you all the tools and information, all the pieces of the puzzle, but ultimately it's up to you to decide, well, I'm going to use this exit sample, or I'm going to use this entry technique, or I'm going to use this stop placement. It's up to you, whatever you feel comfortable with. No two traders should ever trade the same. That's a recipe for disaster. Trust me, I've seen it through my 38 years. It doesn't work. That's why we don't believe in chat rooms or trading rooms, because the beginning traders will turn that into a crutch, and you'll want to mimic the head trader. And that's not in any way what you should be doing if you want to be consistent. You should be taking information and then making your own decisions. This, to me, is the secret of success. Being in charge of your own destiny, not relying on an outside source to tell you what to do. If you're going to rely on an outside source, the only source should be the market itself. That's the chart in front of you and nothing else. And lastly, I want to look at this before we go into the next method that I'm going to be sharing with you. Okay, this is Urban, an older chart of Urban, but I want to share with you this on purpose for two specific reasons. There was a valid buy signal generated here, okay, and obviously it didn't work. You would have purchased it and you would have known right off the bat that you're in a losing trade. Now, this is what most traders do, especially beginning traders. It's usually their very first trade where they have a loser and they say, boy, this doesn't work. This guy, Primo, is like all the other guys I subscribe to or buy their product. It doesn't work at all. And so when you get another signal generated, well, that's the one you don't take, because you know that you're going to just lose again, right? You've got this victim attitude going, and you know that they sold you a faulty program, and so you don't take this signal. And lo and behold, this is the one you should have taken, because it not only would have proved to be a good trade, but you probably would have made back everything and more of what you lost on the first setup. So this tends to ask the question, how do we increase our odds? Because many times you'll get losing trades, and from the minute you get into the order, it will go against you. So how do we filter out those bad trades and kind of stay out? Is there a way to stay out of the bad ones? Once again, we ask ourselves, how can we increase our odds for success? The best way I know to increase your odds for success is by applying method number 2. This is something I've been using for nearly 40 years. I was taught this on the floor of the exchange. This is our pet D tool. You hear me talking about it all the time because it is so powerful. And a lot of people don't even know what the pet D is, even after we've been just screaming about it for the past year or so. It's a proprietary algorithm. Once again, I was taught this on the floor nearly 40 years ago, and it was something we had to construct by hand. Not a very difficult formula, but a formula nonetheless, and something that was too difficult to apply to intraday charts. But because of programmers now and high-speed computers, we were able to generate it into a color bar tool. So what it does now, it simply colors your bars, regardless of time frame or market, either green or red automatically. And what it does is it identifies the short-term trend. Before, the 50-period moving average would identify the overall trend. Now, with the pet D, you're going to know the short-term trend, and it identifies the short-term trend better than anything I've ever seen. On top of that, we found an even I would say, even more powerful use for this. It confirms your signals. Let me show you what we mean by this. First of all, here's what it'll look like. When you see a series of green bars, it's telling you you're in a short-term uptrend. And conversely, when you see a series of red bars, you're in a short-term downtrend. Now, these are ideal scenarios, okay? Because oftentimes, you won't get all of these bars that are all the same color. But that's okay. Let me just show you an example here, an older example in HRB. Obviously, looking in hindsight, we're in an uptrend, okay? But then everything changed tremendously. We didn't top out for more than a couple of weeks, and then we went straight down and even gave back more than we had accumulated. If we apply the PET D, we see that all the time we were going up, even as far back as here, the color of the bar were already green. And look at how the colors changed to red prior to really falling out of bed. Because up until this time, you still could have thought, well, we're just pausing before we go up higher. But if you see here, the rule of thumb is we like to take 3 consecutive, just to be conservative, if you see 3 consecutive bars of a different color, that's usually telling you you're entering another trend. So as far back as 34.5, 35, before it went down to 31.5, the PET D gave you an early warning telling you we're now in a downtrend. If you're long, you may want to get out. If you're short, you may want to start looking for selling opportunities, okay? This is the beauty of the PET D. This will tell you oftentimes in advance of any other tool I know of, often in advance of the 50-period moving average. We look here at a weekly chart of the E-mini starting in 2013 all the way up to October of 2015, or I should say the beginning of October. Look at all the bars now when we change and we add the PET D. We see here that every once in a while we have a red bar here, but we haven't had a confluence of red bars. We've only had maybe 2 at the most. Remember, it takes 3 bars to tell us that the trend has changed, and so far we haven't had 3 red bars in a row yet. We can apply this to a 4-hour chart of the British pound. Looking in hindsight, someone would say, well, sure, it's easy to see we're in a downtrend. Would you have known you were in a downtrend way back here when you had 3 red bars of the British pound, okay? Way up at the top, the PET D was telling you you're in a downtrend. And look what happened in the next days to follow. We can also apply this to stocks. Here's an older chart of ABX. Looking at this, someone would say, well, maybe we hit some support here. Looks like we made a double bottom. Looks like we're kind of stopping before we go higher. Well, let's apply the PET D. Well, the PET D is telling us we had full green bars coming into this period here, and look at all the confluence of red bars here. The PET D is not only telling you, it's screaming to you that we are in a downtrend. Until we get 3 green bars, do not buy anything. And if you're more aggressive, look to go short. All right, this was when the stock was roughly around 18, 19, and the PET D gave a downtrend signal. In ABX, the stock dropped 40% in 2 months. Okay? You see how powerful this tool is? How it's an early trend detector. It's not a system. It's not a strategy. It doesn't generate buy and sell signal. All it does is simply tell you what side of the market to be on the short term. And let's look at how this works in the face of news, because I know a lot of you will say, well, Steve, sure, this is okay, but what happens if a news event comes? Doesn't that kind of just negate everything? Because, oftentimes you'll see a news event and the trend will automatically change. All right, well, let's look and see. We're not telling you that, once again, it works 100% of the time, but let's see something that happened just a couple of months ago in August in El Pollo Loco. The shares plunged after earnings missed expectations. So obviously, the stock fell 21% a day after the chain released second quarter results. El Pollo Loco shares closed Friday at 14.5, down over 3 points or 21%. So if we look at the chart here, well, yeah, they fell out of bed here on the 14th. Someone looking at that, maybe someone in a chat room or perhaps someone in a Fibonacci room said, well, we should be holding here, and you purchased the stock and look what happened. What if we had just simply looked at the PET D? Well, we look at the PET D and we see the PET D as far back way up here, going back to June, already had majority of the bars red. So telling you that we're in a downtrend, there's no reason to even be in this stock if the majority of bars are red. Not until we have 3 consecutive green bars. All right, so what happens now when we combine the PET D, which I just explained to you in detail, with strategy number 4? Remember, I gave you those 2 rules. Well, this creates what we call our dynamic duo. This is probably our most popular and powerful program we have at Specialist Trading. It's when we combine the PET D with strategy 4. All right, so here's how we're going to use it. If strategy 4 generates a buy signal, remember that's where we close in the top 25% and we're above the 50-period moving average, that bar must be colored green by the PET D. That gives us the confidence to take the trade. Conversely, if strategy 4 generates a sell signal, in other words, if two of the rules are met, meaning that we're below the 50 period and we close in the bottom 25% of our range, well, the PET D must color that bar red. If it doesn't get in sync with these two rules, well, then we're not going to take the trade. Let's see if it could have helped us and increase our odds for success. All right, remember we showed you that urban trade. We have two trades here. The first one is the one you most likely took. You got stopped out and you said, boy, this stuff doesn't work. I'm throwing this out the window. You know, once again, somebody sold me something that doesn't work. When the second one was generated, well, that was the one that worked, but unfortunately, that's the one you didn't take. How could the PET D have helped us by applying this dynamic duo? Well, remember, all buy setups should be colored green. So if we apply the PET D, we see here that, look at the color of the buy setup. It was red. So the PET D was telling us that even though the formation was a buy setup, the PET D had already signaled way back in advance that we're in a downtrend. So you don't want to buy in a short-term downtrend. So you would not have taken this trade. Therefore, you would not have had a loser. So you would have bypassed that. No losing trade at all. Now here comes the second setup, and so you're going to take this trade. And guess what? The sell is colored red. Remember, if it were colored green, we wouldn't take it. All sell setups need to be colored red. So now you have the confidence to take this trade, and this is the one that makes you a good amount of money. You see how this works? You see how simple this is now? Now we've increased our odds for success even more. Strategy number 4 just by itself was consistent enough. But now that we applied the PET D, well, we increased our odds for consistency even more. So we really have a dynamic duo here. Remember CVX, where the trade was just a loser right from the start? We got it, we bought it, and then it went straight down. Well, if we had had the dynamic duo, we would have simply applied the PET D, and we would have seen that, well, maybe we should have not have taken this trade. So let's apply the PET D. Guess what? The buy setup was colored red. So that was telling us, don't even take this trade. This is not a valid setup to go long. It was telling us way back here we were in a downtrend already. So this would have kept us out of the trade entirely and no losses at all trading CVX. All right, let's look at some more examples applying the dynamic duo. Remember MSI we showed you earlier in the beginning where someone said, well, Steve, there's no real trend. Why would you go long here? Well, we have a buy setup that's generated using just strategy number 4. Let's apply the PET D. Remember, in order to go long, that bar must be colored green. If we apply the PET D, we see here that all the bars were green except for this one red, but that's okay. We have this green here. So you could have had the confidence to take this trade, and look what happened. Well before some news came out, well before the trend was established. This is how to trade and catch the early trend. How about ADSK? Well, this was a nice trade once again. We're below the 50. We close in the bottom 25% of its range. The setup is automatically generated to go short, but how would we have known to take this trade? Well, we just add the PET D, and in order to take a sell signal, we have to be colored red. And as you can see, the majority of the bars here are red. We only had one green, but that's okay. The majority of the bars need to be red, especially the setup bar. So that would have gotten you into this trade with a lot of confidence. How about Tesla? I remember I asked you to remember this trade. This was a losing trade. Just using strategy number 4, we lost money completely on this one. We got in, and for 2 days it kind of went sideways, and then as you see, the stock went straight up. So would the PET D have helped us? Could we have avoided this using our dynamic duo? Remember, sell signals need to be colored red. If they're colored green, we won't take them. So we add the PET D. Guess what? It's green. So this was telling us, in fact, way back here, when we had these 3 consecutive green days, that we're in an uptrend now. So we would have known this in advance. We're not even going to consider taking this. So we would have bypassed this, not taken the trade at all, and we would have saved us all that money. You see, I've learned in 38 years that some of the best trades are the ones you don't take, because it's the best feeling in the world to know that you could have lost money, but you didn't. It really is a good, I know, so for you seasoned traders out there, it's a great feeling. Oftentimes, the worst feeling is knowing that you took a trade and right off the bat, it lost money. And you think like, boy, why didn't I even pull the trigger? Well, the Pet D, not guaranteed, but oftentimes will help you stay out of trouble. Look at BIIB. Once again, here is a sell signal. It's a little bit more advanced because we're oscillating above and below, but it generated the strategy automatically generated a down arrow, and the Pet D confirmed it. So even though this is a little bit more advanced, if you wanted to, you could have taken this trade. Now, I know a lot of traders here would say, well, Steve, this is a $400 stock. I don't have an account to go short that. We're not saying you have to just trade the stock. You could have purchased options, could have gone long puts, you could have put on some type of spread, something just to help you with this short side of this trade here, because it was validated by the Pet D. And look what happened. The stock dropped 90 points in 2 days. Now, obviously, some news came out. Obviously, there was something that made the stock go down that much. Did we know about it? Did the company call us 2 days in advance and say, hey, post a sell signal in BIIB for all your members, because you guys are nice guys, we like you, and we'd like you all to make money? No one called us up, no one told us. Remember, the only place you should be getting your signals from, the only place you should be getting your outside source information from is not from some chat room, not from a trading room, not from some guy on TV, not from some guy on a webinar such as myself. It should be coming from the market. And Strategy 4 and the Pet D are based off of listening to the market. They're not based off of some convoluted indicators. They're not based off of fundamental news or just cycles. They're based off of just what the market is telling you. So the market was telling us before it dropped 90 points to go short, and it was validated by the Pet D. Now here's some more news. It's been happening recently. We all know that Volkswagen has had some very negative news lately. They've been, very fraudulent in their reports of their emissions tests, and the scandal even had the CEO resign. All right, so obviously this is terrible news for the company. This is an over-the-counter stock. Now, looking at that, this was on the 23rd, just about 3 weeks ago, and the stock just literally fell out of bed, roughly was trading in the 40s, the mid-40s, and then gapped down to the mid-20s in just a few days, all right? Now, we're below the 50-period moving average, so right off the bat, you know that the overall trend is down. There's no reason why you should even be holding this stock if you were holding it as an investor or a trader, because you're below the 50 already. So that's reason enough not to be in it. We've already given you that sound technique right off the bat you can start using today. But let's say you wanted to trade this. Well, you would obviously be going short, and strategy number 4 generated a sell signal on the 9th, about a month ago, in the stock, well before that news came out. There wasn't even any news in the CEO resigning yet, but strategy 4 was telling you, sell this stock. Here is a setup to go short. Okay, see how we closed in the bottom 25% of the range on that day? We're below the 50-period moving average. You see how powerful these two tools are that I just revealed to you? You're seeing them all over the place now. But how would we have known? It's easy to say now that that was a great signal to take. How would we have known then? For all intents and purposes, we could have said, well, this is a double bottom. And the guy I like to follow, his blog, says that, this is the institutions have all come in. The volume has spiked up. There's some Fibonacci support here, so we should be buying. And look at how we just bounced off this level. This is obviously good support, so we should be buying here. Don't listen to outside sources. Your best piece of information is the 50-period moving average and seeing this bar that closed in the bottom 25%. It just met almost half of the rules of the strategy. Now, we still don't know whether we should take this, though. We don't have the confidence to take it, so we add the Pet D. And our dynamic duo is telling us right off the bat, short. So we went short the trade, and we know what happened. Now, if we look at gold, the ETF here, this is an older chart. We see we had a buy signal generated, and this worked out nicely before the trend happened, and another sell signal here, and this worked out nicely before the trend happened. Once we had the Pet D, both were confirmed. The buy signal was green, the sell signal was red. And you see how, just like we said, these are all getting you in and teaching you how to trade prior to the early trend. If we look at a weekly chart of the E-mini, these were all strategy number 4 buy signals. Once we add the Pet D, they're all confirmed by the Pet D. So even though you're not going to trade the weekly E-mini, you can obviously use this as some type of market timing tool if you wanted to, once you know the rules. How about that trade where we said, well, the market fell out of bed. Remember someone was saying, well, Steve, this is kind of like there's no trend here. We're just kind of going sideways. How would we have known to take this? How would we have known the market was going to fall out of bed 1,000 points those couple of days? Well, we had the PET D. Guess what? A red bar right here. That was proof enough that that's all we needed, and the market fell out of bed. And we look at that 60-minute time frame of those charts. We had 2 trades that were winners here and 1 loser. So would the PET D have increased our odds for success? Well, we add the PET D, and we see here that this cell was red. So obviously this was a good trade to take to the downside. Here, this trade, which was a loser, was a sell as well. But what color was it? It was green. So we would never have taken this trade. So we would have bypassed this losing trade. And then the next setup we had was a buy signal, and it was verified by the PET D. It was colored green. So in all actuality, now that we have the dynamic duo, we only took 2 trades here, and both were winners. Instead of just with strategy 4, we had two winners and 1 loser. And now we go to the currency pairs. We can see here that all 3 of these buy signals were all valid strategy number 4 setups, but once we added the PET D, they were all valid dynamic duo setups because they were all colored green. Now that last setup where we went long and had a minor loss going long the Australian dollar, but then recouped it going short, well, could the PET D have helped us with that as well? Let's see. Once we add the PET D, look at the buy signal. It was colored red, so we never would have taken that. So we never would have had a loss. We only would have had a really fantastic winner going short the Australian dollar because it was red. Okay, so let's recap before we go to questions and answers. We just shared with you 2 of our most powerful techniques, the PET D and strategy number 4. When you combine these 2 together, they create what we call our dynamic duo. It's by far our most popular package we have at Specialist Trading. There are so many students that have told us that for the very first time they've become consistent traders. They've been trading 5, 10 years and they've never been consistent. Oh, sure, maybe they've had a couple of good months or maybe even a year or 2 where they've done well, but then the next year they've given everything back. So they don't have anything to show for it over time. But it's the first time they've tried stocks and they can see consistently how well they're doing. 2 steps forward, 1 step back. I also shared with you 2 of the rules to strategy number 4. If you take anything away from this at all today, apply those 2 rules. They're yours to keep now. You can apply them to your current strategy, or you can build a strategy based off this. A lot of the people that come to our free presentations like to construct and make their own strategies. They incorporate these 2 rules in their strategies, and they've told us they've increased their odds by applying these as well. So I want you to ask yourself before we go into the question and answer, do you think any of these edges could have helped your trading this past year? Anything from the 2 rules I share with you to the PET D to the actual strategy number 4 course. I know a lot of you roughly 10 months ago at the beginning of 2015 had all these goals and aspirations about where you wanted to complete the year. I'm sure you all had goals of making extra income or wanted to pay for that dream vacation you had, or possibly buy a car, or maybe even a down payment for a house. And you were thinking that you were going to be doing well, you were all excited about the coming year. And now that it's October, with only a few more months left to go, you see that you are really far away from ever meeting those goals. There's no way you're going to meet them. This is the way the majority of traders are, and the way we mostly start years off, with all these goals and dreams, and they're usually never met. I really think strongly that if you would have applied just a few of these rules today, you could have at least been on that road to achieving your goals this year. So this is what we're offering you today before we go into questions and answers. We're offering you the dynamic duo, okay? Something you want to take advantage of before the end of the year, something before the year slips away. This is strategy number 4 plus the PET D. We're giving you instant course access, detailed instruction. I'm going to teach you all the entries, exits, and stop rules to strategy number 4. Plus we're supplying you with signal alerts and the 4 PET D trading techniques, and this includes all the add-ons. In other words, the buy and sell alerts for strategy number 4, as well as the green color bars tool for using the PET D. The best thing about this as well, you're going to get lifetime correspondence with me. You can contact me whenever you'd like. I'm going to be your personal mentor, and any questions you may have, you don't understand how to trade these, I'll be right there alongside of you, helping you every step of the way. Now, let me just show you what happens after you become very more familiar with the course. We start emailing you alerts for stocks. Okay, and here's an example of something that happened just about 3 weeks ago. Here's what you'll receive through our email signal alert. Okay, here was an example of the buy signals that were generated on the 28th of September, and here was one in PayPal, PYPL, and it was a strategy number 4 sell signal. Okay. We give you all the information where to sell, even though this is just for educational purposes. Over time, you should be spotting these on your own. So here's the sell signal that was generated on the 25th for entry on the 28th. Now, once again, had you just been a member of the strategy number 4 course, you're not really familiar with this. You're not sure if you should take the trade. But if you add the PET D, you see that, well, the bar was colored red. So it would have given you the confidence to take this, and the stock fell in the next 2 days. All right, these are the type of signal alerts you'll get, plus this is the way you'll be able to spot and see if you'd like to take trades with the PET D involved as well. Also, we show you how the dynamic duo can be applied in the face of news. Now, we've all heard recently of what's happened with Weight Watchers and with Oprah Winfrey. Okay, everyone was like amazed at how the stock was just basically doing nothing and then just took off like crazy when it was announced that Oprah Winfrey was going to be involved in the company. She had a majority stake in the company. She was going to be the spokesperson as well as use it herself, and the stock just took off. Okay, if we look at the chart prior to that announcement, someone would say, well, the stock's doing nothing. There's just really trendless. It went all the way basically from a $30 stock over the years, over the last 2 or 3 years, down to a $5 or $6 stock. Nothing is happening at all. So that's not true, because where is price in relation to the 50-period moving average? Price is above. So this is telling us the overall trend is up. It's not telling us we're in a range. It's telling us the overall trend is up. And what do we have here? A bar that closed in its top 25%. And even though you're not a member of strategy number 4 yet, it met all of the rules of strategy number 4. This was on October 5th. Before that announcement came out, you would have been privy to knowing that this was a buy signal in Weight Watchers. But it doesn't stop there. How would we have known to take this? Because after all, the stock has been falling out of bed and basically just drifting lower for the last couple of years. Well, we add the PET D. Once we add the PET D, we see here that the bars have all been red. And guess what? The very first day it flashed green was the day a buy signal was generated, on the 5th. So you basically could have been long this stock around 6.5, 6 3/4, and we all know what happened after that. The dynamic duo generated a 12-point gain, or roughly 200% gain, in just 3 weeks. Okay? Remember, no one called us up. Oprah Winfrey is not a personal friend of mine. She didn't say, hey, Steve, I'm going to be investing in Weight Watchers. So you guys have very nice members. I'd like to make them some money. So why don't you tell them to go long a full 3 weeks before I make this announcement? No, no one told us anything. We got all our information from only one source. The market in front of us, the stock in front of us. That's all we do. You know, keep your trading simple, and you'll see a lot more setups, a lot easier than complicating it by listening to all these outside sources like news or chat rooms or trading rooms or guys on TV. Don't rely on those things. Rely on the only thing that you should be, which is the chart in front of you. Now, lastly, I want to share with you the power behind the PET D itself, because you can also apply the PET D to long-term trading. In the last slides we have here, here's a monthly chart of the S&P 500 index, okay? Here's where we went straight up starting in 1995 all the way up to 2000, where the dot-com bubble burst, and then we fell out of bed. And there was the big crash of 2001. Well, we stabilized here in 2003 and then started to go up higher until we got up to this point here in 2007 and 8. And then the housing crisis and bank crisis happened, and then we crashed once again. Then in 2010, we've been going up ever since, okay? Lots of peaks and valleys. If you're a long-term investor, or even if you just have some type of an IRA or a long-term portfolio, could the PET D have helped you, telling you when to stay in the market and when to get out entirely and to put your money in just in cash, okay? Your investments just in cash. Well, let's apply the PET D. As we see here, since 1995, when all the majority of the bars are green, you're in the market. But then when we have 3 red bars in a row here in 2000, you would have exited and bypassed all of this crash right here. Then in 2003, the last part of 2003, you have 3 green bars, and you're in the market the entire way up until here in 2007. You would have exited into cash and missed this crash all the way down in 2009. Then at the end of 2009, we have 3 green bars, and you'd be in the market this entire time. Sure, you had 2 red bars there, and you look like maybe that was it, but then we went back on board. Now we have 1 red bar here on a monthly chart. Now this month will be coming to a close in just another week or so. Would you like to know if that's going to be colored red? And then what if you wanted to know if the next month, November, what color that's going to be? Wouldn't you like to know if you're a long-term investor or where you want to put your money for the long term if you have 3 red bars in a row? So this is the beauty of the Pet D. All of our Pet D customers are going to know this in a few months. So it's up to you if you want to become a member, and you'll be able to get this information as well. It's worked for the last 20 years, and so for long-term investors, this can really, really increase your odds. So once again, we're offering all of our attendees today your last chance to get on board for 2015. This is our Pet D strategy number 4 dynamic duo course. Remember, this includes both the add-ons where you color the bars green and red automatically, and where you get the automatic buy and sell signals, as well as signal alerts and lifetime correspondence with me. Okay? This is our dynamic duo special. Now remember, I teamed up with Pro Trader Strategies, our marketing company, and on their website they have advertised our dynamic duo because it's so popular, close to $3,200. But we're dropping it today. We're dropping the price dramatically down to $24.95. Both of these great strategies and techniques. Plus, we are offering payment plans. So if you can't come up with $24.95, not to worry. You can come up with a small sum of money, and they'll structure a payment plan for you. So you can still get involved even with a small deposit. So here's how to do it. I'm going to put this information up on how to contact Pro Trader Strategies. There's their phone number. There's their email address. And if you look at the very bottom, you can copy and paste that link, or cut and paste that link onto your browser. But I believe if you look on the right-hand corner underneath the chat box, they posted a live link that will automatically take you right to that sign-up page, okay? If you want to put together a payment plan, because they're only going to be offering that for the next, I would say, 2 or 3 days, contact Pro Trader Strategies. Call them directly at area code 310-598-6677, and they can put a payment plan so you can be up and running as soon as possible in just a matter of moments with a small deposit. Okay? Remember, you owe it to yourself at the end of the year to get back on track. I've just shown you examples in stocks, forex, currency pairs, futures, from tick charts to monthly bars. All right, so I've shown you when it doesn't work. I've shown you what it does work. I've shown you how to increase your odds for success. So we've covered the full gamut. All right, we're not just going to cherry pick and pick the examples where everything makes 1,000%, but we're trying to be honest with you and get you back on track. Remember, we're an educational company, so as your educator, I'll be there with you every step of the way. So I'm going to leave this information so you can call up Pro Trader Strategies right now and set up a payment plan if you like. And I'm also going to open up the question and answer box. And I thank you for holding off on any questions, because this is the first time I'm going to be seeing them. Let me just scroll to the top. First question, is this applicable to the Forex? Yes, it is. I showed you a bunch of Forex charts, 4-hour charts in the British pound, weekly charts in the Australian dollar, as well as daily charts in the Canadian dollar. So it works. We have many, many customers who just use the dynamic duo and the Pet D on just the currency pairs, okay? Steve says, so if not above or below the 50-day simple moving average, then leave it alone. Well, yeah, but that would mean it would have to be closing exactly on the 50 period. I've rarely seen that. But remember, the rule of thumb is you want to see 3 to 5 closes above the 50 period moving average to tell you that the overall trend is up. And you want to see 3 or 5 closes below to tell you that the overall trend is down. And remember, this is not a strategy. So simply because we're above the 50 period moving average, it doesn't give you a license to just buy at the market. This is not a strategy. It's just a overall trend technique. It's telling you what the overall trend is. So you want to see, a reasonable amount of number of bars above the 50 to tell you that, well, the overall trend is up. Now I'm just going to start looking for some structure to go long. Or 3 to 5 bars closing below the 50, well, the overall trend is down. I need to start looking for some structure that's going to let me to go short now, okay? That's the way it works. Linus says, why not use the 20 period simple moving average as a buy-sell line, FX scalping one minute chart? Linus, you can. So the question basically is, can't we just use the 20-period moving average? You can, but what I've seen that over time, in my 38 years of trading, is that the 50 works the best. In other words, we don't want to make our trading complicated. And the way you overcomplicate your trading is by changing everything for a different market or a different condition. That's what most strategies or techniques do. They say, well, do this for the currency pairs, but once you start trading the futures, you have to change things around a little bit. So we don't believe in that. We think if something is a benchmark, if it stood the test of time, it should work in all markets, in all time frames, using the same parameters. And in my 38 years, the 50 works the best whether you're looking at a weekly bar, a monthly bar, or a tick bar chart. Now, if you're saying the reason why you want to decrease the 50 down to 20 is because you're looking at a 1-minute chart, well then I would just apply the PET D, because the PET D will work even better than a 20-period simple moving average. I would use the 50 the way we've shown you as the overall trend, and then apply the PET D to tell you what the short-term trend is doing. That's really the way the majority of our students use it. It works very well that way, okay? Steve says, you use daily charts and check this all out prior to the opening, right? You just said that this works on Forex too, so that wouldn't apply. Is this live? Well, yes, it all depends on how you want to trade, but if you're trading stocks, yes, you see all this prior to the opening. If you're looking at the Forex markets, you can use the same process, but since the Forex markets are continuous, remember, you still need structure. These are not simply telling you to buy or sell at the market. It's just the PET D as well as the 50-period simple moving average are giving you structure in terms of what side of the market to be on or what the short-term trend is. But the strategy number 4 gives you the structure. So regardless, it will give you setups all the time. It doesn't matter if it's 24 hours or not. Steve also asks, says, your system seems to buy high and sell low. That is following the trend. Well, Steve, first of all, it's actually quite the opposite. I don't know if you were here when I explained this. We are buying low in an overall upward move. That's called a pullback. I'm not sure how long you've been trading, but that's what a pullback is. So if the overall trend is up, you're looking for a pullback, a sell-off to the downside. That's a pullback. And to, the unsophisticated investor, they think that you're buying low. You are buying low, but you're buying in an uptrend. Now, you're not picking a bottom. Now, conversely, if the overall trend is down, to trade pullbacks, you're looking for a bounce. All right. To the unsophisticated investor, it looks like we're picking a top. But what we're doing is selling a pullback. A pullback is vastly different from trading tops and bottoms. Okay. Chris asks, what only platform does this work on? Well, it only doesn't work on one. It works on a number of platforms, Chris. It works on both the PET D and Strategy 4 work on MT4. They work on TradeStation, Metastock, NinjaTrader, Sierra Charts, Interactive Brokers, FCXM, and Thinkorswim users can also use this, but what you have to do is you use the free stock data that runs that you get with Thinkorswim, and then you just apply it to NinjaTrader charts. And we set you up with the NinjaTrader platform for free, so there's no extra cost. In fact, our tech support will help you set it up entirely. So all you have to do is just simply, tell them what you want, and you'll be up and running very quickly. William asks, do you use these strategies for scalping? Well, I personally, William, don't use them for scalping. I don't really believe in scalping myself personally, but we do have members who do that will trade them in and out very quickly using especially the PET D. The PET D helps you tremendously to scalp because it really identifies the short-term trend. So, if you're asking me personally, do I use them? No, but I know our members do, and they've had some nice success doing that. AJ asks, is that we need to buy when it is near the 50-period simple moving average? Well, remember, it should be above the 50-period, not just near it. If you're saying near it, meaning that you have originally been above the 50 and then you come back down below, that is one technique that is going to give you less risk. But we kind of go over that in the course. But basically, remember, just the overall gist is if you're going long, regardless of what strategy, what technique you're using, always enter above the 50. You're going to really increase your odds for success. And if you're going short, regardless of what strategy, it could be based off the tides of the ocean. I don't care what it's based off of. It could be based off news, even though we don't look at news. But if you're going to be going short, always enter below the 50. That's the main thing you should be getting, or understanding at this point. The main concept I want you to, because that's what's going to make you consistent. Richard asks, what package would you recommend for NQ day trading? Oh, well, obviously I would recommend the PET D. The PET D, in my opinion, is our most consistent and our most popular package to date. It works the best with just in terms of consistency with just about every market and time frame. So let's say you're trading, the NASDAQ intraday, and then every once in a while you want to trade currency pairs. You can virtually use this on anything. And let's say every once in a while you say, well, I have an IRA account. I want to check how I'm doing that in my position trading. Well, use the same parameters, the same PET D, same dynamic duo. So you're really getting a lot of strategies just in one package with the dynamic duo. I would recommend the dynamic duo for everyone. Okay. Stacy asks, thank you for the presentation. Do you actively trade using these two methodologies? Any results you can share? Yes, Stacy, I do use them. I was using them this morning prior to actually giving this presentation. But remember, I said in the very beginning, I said a recipe for disaster is trying to mimic what someone is doing. Okay? And that's why we don't have trading rooms or chat rooms, because no two traders should ever trade the same. I can be looking at a chart, whatever time frame I'm trading. I trade the E-minis mainly, and we can have 5 other members trading the same time frame, taking the same setups with entirely different results. All right, so which ones are you going to believe? I mean, they're all correct. It's all because we come in with different risk parameters. I like to get in and out very quickly. That's just the style I like to trade. Other of our members like to stay in much longer. So our results are all going to be different. So that's why we don't generate any results for anyone. Now, sure, do I have some losing trades? Sure. I'll have some weeks where I go where I'm flat or don't, make any money. But then usually it's made back the next couple of days or so. So it's just, it all depends on what type of a trader you are. But we are not a systematic company. We don't keep results because we know that that's a recipe for disaster. The reason why we have to show you a disclaimer is because that results don't hold up. They never do. So we're required to say that there's no guarantee that anything will remain the same. The only thing we have shown that seems to have consistency over time is when someone learns to apply these techniques that match their own personality and make them feel comfortable. What this means, to sum up, is just that everyone trades differently, and even though you can have the same setup, you're going to get different results because someone may not want to pull the trigger there. They may want to wait for a better entry. Someone else may want to wait for a longer term trade so that they can exit with a much larger gain. Someone like me can say, I'm in and out in about 5 minutes. I just want to take a quick profit and get out. So everyone's different. Okay. Let's see. Dave asks, should you only trade off the chart you are looking at? Sometimes I see the 50-period simple moving average above on the daily chart, yet below on the 4-hour. That's a very good question, Dave. And yes, we teach, I know that everyone has a different idea, we teach only to trade the chart you're looking at. Remember, I just said a few minutes ago, don't overcomplicate your trading. In my 38 years, I have seen no consistency in looking at 2 time frames at once. I've seen no consistency at all. The only thing it has served is to keep me out of a lot of good trades. So in other words, I'm not going to look at a 4-hour chart and make sure that the smaller time frame, the hour chart, is in sync with the 4-hour chart, or that the 50-period moving averages are in sync. Because if I do that, I'm going to miss a lot of trades. I only am concentrating and I'm only concerned with what the indicators or what the setup or what the PET D is on the chart I'm looking at. I don't care what the higher time frame is doing. There's no reason to, in my opinion. Remember, I've been trading for 38 years. I've just never found any consistency to that. I know some traders have been taught, and some educators teach you that that's so powerful. I have failed to see it. And why overcomplicate your trading? Why look at 2 charts? Keep it simple. Now, having said that, since I just told the other person, Stacy, that everyone trades differently, I'm not going to tell you you can't do it, you can't use it, because we have some students that swear by that and say, well, Steve, I was taught that way, it works for me. If it works for you, fine. okay? But if you're asking me, do I teach that? No, I don't. But I would never tell anyone, don't do that, the way I would never tell anyone, well, stop looking at news. If you have to look at news, go ahead. But we don't teach that. It's not required in any of our courses. So it's up to you. Everyone has to find their own way. I don't require any of those things, but if you simply have to feel attached to them, then go ahead and continue to use them if you like. Richard asks, is the slope of the 50-period simple movement a factor? Yes, Richard, it can be. In the beginning, I tell all of my beginning students, because you're new to this, only trade the setups that have a strong upward slope. So if you have a buy setup, only trade those where the slope is very strong upward, because that's telling you that it's a strong upward trend, overall trend. And if you get a sell setup, only take those setups where the 50-period simple movement has a strong downward slope, because it's telling you a strong overall downtrend. As you get more sophisticated and as you get more experience, then you can trade regardless of the slope of the 50-period. But in the beginning, I tell my students to look for a strong sloping bar. Bruce asks, is the PET-D a proprietary paint bar? Yes, it is, Bruce. I was taught the formula over 30 years ago on the floor of the exchange, and we keep it proprietary because we've had a lot of interest in this. I know we've been saying this for a while, but we have hedge funds interested in it. We have a lot of people that are interested in licensing this from us. And believe me, I've looked at the blogs, I've looked at all the chat rooms, and everyone in the world seems to know that they figured out the PET-D, and I can almost tell you, guarantee that no one has it figured out correctly. Sure, they may come up with things that are similar to it, and I've just about proven them wrong on just about everything I've seen out there. I mean, for my own satisfaction. The point is, even if someone were able to figure out what it's based off and figure out the formula, okay? I can tell you what it's based off. It's based off momentum. But if you were able to figure out the formula, it wouldn't matter. I guarantee you would still lose using it because you wouldn't know how to use it. See, the beauty of the PET-D is not the formula itself. The beauty of the PET-D is knowing how to apply it. Now, I just shared with you one of the great tools and ways in which to apply it as a confirmation tool to confirm your signal. So regardless of what strategy you trade, if you know how to confirm the signal by the bar either being green or red, you're that much ahead of the game already. Most people most likely wouldn't use it that way. They try and pick tops and bottoms the same way. They try and get in ahead of the news. They try to use it as if it were a magic lamp, and I know they would lose money. So the beauty of the PET-D in the course is my instruction that comes along with it, my 38 years of experience that I'm giving you in that, not just the formula, because the formula is not going to make you any money regardless if you figure it out or not. It's the instruction that comes with it that will help you to become consistent. So that's really what you're paying for, my mentoring of how to use the PET-D, okay? Let's see, a few more questions here. Steve, great presentation. Well, thank you, Steve. The system gives alerts, I believe. Aren't there hundreds of cases each day where the dynamic duo indicates a buy or sell, even using the daily chart for stocks? Thanks for taking my question. Yes, there are literally hundreds of stocks a night, depending on the volatility of the market. But what we suggest to our students is you should create some type of a basket or watch list, anywhere from 10 to 20 stocks, and just focus on those. Don't feel like you have to look at the entire universe of stocks because you'll go nuts. There's just too many. And when I provide signals and I post signals for my students, they're for educational purposes. We're not telling people that, well, these are all the strategy 4 PET-D signals that were generated tonight. That's not what we're saying. We're saying this is what you should be focusing on what to look for in your studies. Setups like this, all right, because there are lots of setups on a nightly basis. So take 10, 20, possibly 30 of the best stocks that you're interested in the right price range, and just follow those. You'll get a lot of signals just based off those baskets of stocks. That's the way we advise all of our students, okay? Stacy says, thank you, I agree. Blindly following someone else for a suggested strategy is definitely a recipe for disaster. Yes, it is, Stacy, and I'm not trying to be condescending or arrogant when I say that. I'm actually saying that from past experience, because trust me, if some of you are struggling and at wit's end right now and extremely depressed or frustrated in your trading, I know what that's like. I was on the trading floor with tons of traders and I couldn't make a dime. I was doing all the things I had been taught. I was using all, fundamental news. I had tons of indicators I was following. I was following all the greatest traders and their newsletters, and I still couldn't make any money. And so I didn't think I was going to be on the floor much longer. I thought I was going to be fired because I couldn't make any money. And my mentors saw how much I was struggling. These were traders that were on the floor themselves a good 40, 50 years. And so the first thing they taught me was they said, Steve, get rid of all that junk. Quit trying to follow outside sources and having those things, whether they're indicators or some guy in on a newsletter telling you what to buy or sell. Learn how to listen to the market, and then that's where you take your signals from. So in the beginning, it was difficult for me, but what choice did I have? I was either going to get fired or I had to learn how to trade. And then even after I decided to go that route, I wanted my mentors to tell me what to buy or sell, and they wouldn't do it. They said, there's no way you're going to learn. You can't follow us because you'll be right back where you started again. You've got to learn what to look for and then make your own decision. So that was tough at first, but it helped me so much, and this is what I'm trying to instill in all my students as well. I could easily post signals and say, take these every night. I could tell you what I did that day and say, trade alongside me. And I guarantee you the majority of students of mine would lose money, because nobody trades the same. That's the great truth I've learned in 38 years. No one trades the same, nor should they. You should trade what makes you feel comfortable. That's the only way you're going to get consistent. If you're uncomfortable, you will trade the strategy faulty. You won't enter at the right place. You won't use the right money management. You won't follow the rules because you're not comfortable. You're going to be sweating the entire time you're in the trade. And you're going to make mistakes, and ultimately it'll result in a number of losses. But if you're feeling comfortable, if you're picking the right time frame for you, if you're picking the right strategy, if you're picking the right market that you trade, that you like, you're going to be confident and you're going to do well. So that's what we encourage, and that's what we promote. We don't in any way promote chat rooms or trading rooms where everyone trades the same thing. It's a recipe for disaster, okay? Time for just one more question. Remember, Enrique is asking about payment plans. Contact Pro Trader Strategies. They are in charge of the payment plans. They can set that up for you, and you can be up and running ASAP. You can probably be up and running, getting all the rules and all the add-ons for your software today. But you have to contact them. Remember, this works in any market or any time frame. Crude oil, it works. We had someone asking for crude oil examples the other day, and I showed him a number of dynamic duo examples where there were like 10 winners in a row. Okay, I'm not going to guarantee that again, but this is the way it happens. He was looking at tick bar charts. So it works in crude oil, it works in ETFs, it works in indexes. By works, I mean there is consistency. I'm not going to promise you that every trade's a winner the way I showed you, but the PET D will really increase your odds for consistency. So remember, think back in January at the beginning of the year. You had all these hopes and dreams of where you wanted to be. Are you there at all? Are you even close to where you thought you'd be? My guess is not at all, okay? Don't worry, I know exactly what that feels like. But I'm here to tell you, here is a technique, our dynamic duo, that has really increased a lot of our students' odds for success, okay? The best thing is, if you want to come on board, you can start with payment plan. We have a payment plan, so you don't have to come up with a large sum. And I can almost guarantee, even though I can't, it's not legal, and I wouldn't do that, but I can almost promise you that this time next year, you'd be very happy, you'd be very satisfied. So contact Pro Trader Strategies. They'll give you the information. They'll help you set it up. They have a great tech support systems they can set up for you and help you have this up and running, so there's nothing you're going to have to worry about. And I look forward to all of you joining and becoming a part of the Dynamic Duo course and becoming students of mine. Thank you so much. I'll see you next time. Bye-bye.